Welcome to Private Equity Profits. Clifford Locks is a certified board of director, a trusted confidant to CEOs, C-level exec, and high-potential employees to help them clarify goals, unlock their potential, and create actionable strategic plans. Seth Greene is the nation's foremost authority on growing your portfolio companies with direct response marketing. He is the founder of the direct response marketing firm Market Domination LLC, and he is an 8-time best-selling author who has been interviewed on NBC, CBS, Forbes Inc., CBS Money Watch, and many more. Cliff and Seth interview top players in the financial sector, focusing on private equity firms, venture capital companies, and family offices, discussing developments and trends shaping the industry. These experts will share with you how they've grown their businesses and increased profit, and how you can too. And now, here's your host, Cliff Locks.
Welcome, everybody, to another episode of the Private Equity Profits Podcast. I'm Cliff Locks, your host. Today, our guest is Jeremy Mercer, the CEO of Matador Capital, a private equity company that specializes in the ownership and the operation of commercial real estate properties in the greater Southwest of the U.S. Matador Capital focuses on the industrial warehouse manufacturing facilities, flex space, and other industry-based services, along with lending on commercial real estate assets. Jeremy is also the vice president of Mercer Company, the leading commercial real estate company in the Dallas-Fort Worth Metroplex. Mercer Company does more than provide strategic consulting, transactional services, and investment sales opportunities. They partner with their clients to make the right deal together. Jeremy, thanks for being on the show today. I appreciate that.
Yeah, thanks, Cliff. Appreciate you having me.
Thanks. Tell us about your background and how you got started in real estate.
Yeah, I grew up in Irving, Texas, a suburb of Dallas, and I ended up having the opportunity to go play football in college at Texas Tech in Lubbock. And before I went out there, I really thought I wanted to be a sports agent. I think Jerry Maguire was out that time when I was in high school, and I was like, I want to be a sports agent, and so I talked to a sports agent. He said, "Hey, you need to major in finance." And I don't know what it was. At some point when I was playing football, I was like, I don't want to be a sports agent. I kind of want to do real estate. So I changed to the finance with a real estate emphasis. So that's what I ended up getting my BA in. And so at that point, around that time, my brother, who's 6 years older than me, he started making the transition and getting into commercial real estate. We grew up in the steel business. Our dad had a steel company, and my brother went into the steel industry, and he grew one of their another company's top territories, and they gave him like $100 a month raise. And I think he was like, this isn't what I signed up for. And I think he figured he was going to go and do pharmaceutical sales or commercial real estate. And he figured he wasn't pretty enough to go into pharmaceutical sales. So, so he got into the industrial game. I get out of college and I started chasing pre-foreclosures on homes and just trying to buy houses, because that was about all I could maybe figure out someone to give me a loan on or something like that. And, I bought my first rental house at 23. And then at about 24 years old, I was into music, and I was living in a house with some buddies from high school, making a bunch of noise, and we knew we'd kicked out of the neighborhood. So I had to find a place to put my music gear, and I found this building, and this building was 20,000 feet, and it had 55 rooms built in it for monthly rehearsal. So I moved in this building, and then about a year later, the guy that owns it was like, "Hey man, why don't you buy this from me?" And I was like, this guy was like 65 years old, very unengaged. I was young in the music scene, he goes, real estate, you're in the music scene. I said, okay, great. Let me see if I can figure it out, and I couldn't get a loan on it because it was all non-credit tenants, because it's all month-to-month leases. I went to my brother and I said, hey, I think I got to get the building involved. So would you buy the building and we'll cross collateralize it? That's what we did. So we got that. He purchased the building. I leased the building from him. We cross collateralized the loans, and I started that. My brother had got into the industrial real estate and did really well. And then he started buying some buildings. And I said, well, and he goes, well, hey, I need a property manager. So I was running my rehearsal studio. And then I started managing about probably about 250,000 feet of property in the area with about 30 something tenants. So I did that from about 24 to 30 and kind of got burnt down on the property management end. My brother at that time also he transitioned from the company he was working at and opened up his own company, the Mercer Company. And he's like, hey man, why don't you just come broker with me? And I said, okay, sure. So I started brokering and man, I came out hard, guns blazing. And my first year I was the Dallas Business Journal Rookie of the Year for brokerage. And it was just kind of, I brokered hard for about 13 years. And along the way, we would buy some assets. Usually it'd be like our client would kind of miss on a deal and we'd be like, man, that's a great deal. I don't know why he's not buying it, but we'll go figure it out. And so we just kind of started stepping into it. Well, I'd say probably about 2017, I guess all private equity companies got really excited about industrial buildings, and whereas, we couldn't give those things away when I started in the business, I couldn't give away a 12 cap. Like people wouldn't buy that,
Wow.
Then I'd get a call a week, Jeremy, we have $1 billion fund. We want to buy last mile, core, blah, all these buzzwords that came out of all that. And that pretty much was the epicenter of the territory I worked in Dallas called Brook Hollow, extremely infill, old warehouses,
Mm-hmm.
Very close to downtown. So at that point, man, we start selling a bunch of buildings, and we started getting on a good run. And I had such a knack for finding deals, and I made a lot of really good commissions on it. But then I finally just went, man, I am making all these people so much money. And man, like all these private equity firms, they're good on the ops side, but they don't really have a bird dog for buildings. And I can do that and I can run the ops side. So that kind of eventually transitioned me into, I told my brother, I said, hey, we need to like formalize this more, right? Like we're doing this, but let's formalize it more. And, he was busy with some other things. So I was like, okay, well, I'm just going to do it. So I did it, and so about 1.5 years ago, and, because I'd built a portfolio with another private equity company and really good friends of mine, and they really just kind of took off and, they let me invest with them at their GP level and all that stuff. And we exited that portfolio and did really well on it. I think we exited about 500,000 square feet. And so now I was like, man, I can go do this on my own. But I still JV deals with those guys now. So, it's a good partnership. Deal's too big for me, then we'll tackle it together. And they taught me a lot too. So that's kind of where I am today. I still broker a little, but really just selective on what that is. It has to be a deal big enough and the right person I want to work with. But otherwise we are full on buying assets. So
You got yourself a pedigree there and you had a learning curve.
Yeah.
See how trust and friendships in the industry allowed you to thrive and learn from each other. Very strong.
Mm-hmm.
And I stress the word trust, and that's the magic with the PEs. They just,
Yeah.
They have the assets. It's interesting how you built a platform and you're able to scale and you learned, and then the money came at you fast and furious because you were deploying it intelligently with a great returns.
Mm-hmm.
See how that enthusiastically, we find that over and over again, that the winners in our industry, the track record speaks for itself and their ethics.
Yeah.
And that allows them to thrive. And that's the magic with PE, is the ability to communicate, be open, and be honest. And you and your brother, you guys are close.
Yeah. Yeah. We're real close. So.
Yeah. See, that's the magic too. See, you figured it out.
Yeah.
I'm proud of you guys.
Yeah. We're really tight. And, I've kind of always just followed him in whatever he does. And, it always works. And we're kind of like twins, people, if, our wives can't tell us apart. If we're talking in a room and they're not looking at us, they don't know who's talking. So it's pretty funny. So
I'm glad you guys enjoy each other's friendship. That's the magic. We find sometimes there's some friction in the families, and it's like, it doesn't have to be that way. And here's a good example, with your family, my family, there's no real friction at all.
Yeah.
Point,
Yeah.
You also own two other businesses. Can you tell us about them?
A commercial roofing company and a commercial finish out company. So, the commercial roofing side, one of my best friends since I was like in sixth grade, he out of college, he did commercial roofing for about 8 years. And then he moved over to manufacturing for a while and was running that company with his father-in-law. And then that company was just kind of on its way out. It was an oil-based manufacturer. Oil took a turn, and he's like, "Hey man, I got to do something else." And I said, "Man, I'm going to tell you right now, we could start a roofing company and do great because I've literally given away millions of dollars of roofs and got a barbecue sandwich for it." And I said, "We've got the lead generation." And then so what we did is we brought in another partner who's very, very big time broker, who's also my old college roommate and also one of our mutual best friends. And it was just a great, it was the right model to have I can't have another job. Like it just doesn't work. But the president of that company, I probably spend 20 minutes a week on that company. Right. And he runs it. The most I do is like, "Hey, this building needs a roof. Go look at it. Hey, this client of mine called me. He needs a roof. Or he has a roof issue, go figure it out," and vice versa with our other partners. So, but that's been a really good, it's been a really good business. And what's great is like a lot of the other PE firms that I'm real good friends with that I sold a bunch of buildings to, we're doing all their roofs now, but that really speaks to our president, Jimmy. He's just a great guy. He's just extremely hard worker, extremely responsive, and that's the biggest thing right now. It feels like a lot of contractors don't respond. That's not him. So with that, we saw the need for all the finish out that gets done in these buildings too. And we had a guy come to us that Jimmy was mutual friends with, and he is very seasoned in the industry. His father was in the industry at a very, very high level. So really good pedigree, worked at a very large shop on commercial finish outside. And so we partnered with him and, same type of structure, right? Like we all own it, but like I spend 20 minutes a week on it. And I'm just sending him leads, but some really good businesses. We've got in with a lot of really good people and they've taken off really quickly. So now it's really just kind of helping those guys scale those companies and just being almost like a board member, right? To that degree. So you wouldn't see my name on any of the websites or anything like that. You wouldn't know that I own it, but it's been a very good compliment to, we've created some really good due diligence teams out of all that with our PMs, and they know how to look at our buildings and how to get it done so we can execute DD quickly and stuff like that. So
you bring up two good points. You empowered your team, okay, which frees you up to actually work on what you're passionate about. Even some of the newer technology, I see some satellite imaging at this point is able to look at the roofs. You can do it measuring for sure, but looking at it where the quality of the roofing, I guess the sun is brutal down in your markets, right? You're in the South. Mm-hmm. And I've had, 2 million square feet. I was the VP of sales and marketing. Mm-hmm. And the flat roofs were definitely they leak at times. Yeah. There's just the nature of a flat roof, and it's, and you're going to have to put some money into it. What have you learned from them regarding investing?
I think investing in real estate, I think it's really good to have a niche. If you look on our website, our number one core value is there are no part-time gangsters. So we are very focused on what we do. We don't part-time an asset class, we don't part-time anything. Like we are Class B, C industrial buildings in Texas, Oklahoma City, and pretty much on I-35, and that's what we're good at. It makes, I think in investing, getting to a no very quickly will get you to the right yes. That makes our pipeline meeting go very quick. We can, deals that are presented to us, we look at them, no, yes, no. Fortunately, we have a great pipeline of deals, so we have the ability to say no a lot, to really find the ones we really like and that really meet our criteria. So I think the biggest thing with investing is really knowing what your plan is and executing it and not deviating from it. I think a lot of people get frustrated real quickly and say, "Oh, well, this didn't work, so I'm going to switch to this now." Or, we're going to do all these different things, and then no one becomes good at anything. They're, just very part-time at all that stuff. So that's really our core focus, is to be very, very dedicated. And like I said, be gangsters at Class B real estate in Texas on I-35. So that's what I've learned.
So that's really the foundation of your sound investments at that point. You really understand the space you're going to operate, and you buy correctly.
Mm-hmm.
And you're an operator. You're not afraid to go in there and really treat the tenants with a high level of value that they bring forth, because they pay the leases on a monthly basis.
Yeah. Oh yeah.
And you're looking after them, and vice versa.
Yep.
You brought up something earlier, which was interesting. You feel like a board member, such an important position in these companies as a whole.
Mm-hmm.
When you look at private equity, and a lot of times they'll put somebody on the board that's part of the team, but the seasoned individual that's out there in the industry understands the PE side and the operational side. That is the magic for the success to be a board member. So, you bring in something. I have the same kind of credentials. We got the operational side. Yeah, we have the PE side, but it's the combination that actually allows you to, what we say in the boardroom, it's nose in, fingers out.
Yeah.
We're inquiring, but we're not looking to run a company at this point.
Right.
We'll, provide some motivation and ask intelligent questions.
Yeah.
So, what are the challenges and pitfalls associated with investing in real estate, and how do you overcome them?
For my asset class, I think some of the challenges is, I guess, the ownership that I'm usually buying from is, it's not an institutional type ownership, right? It's like when we go under contract, I don't have an email 2 days later that's a Dropbox file with every single piece of due diligence in it. You know what I mean? It is a lot of hunting and finding and pulling out of people, certain things. I almost feel like when my due diligence team gets a hold of a building, these owners are like, what did I just get myself into? Because the amount of questions that come at them, even though it's in the contract that we're going to ask for these things, they're not ready for that. So that's a challenge, is getting information, getting the right information, making sure it's true. That's probably the trickiest part of it. I think the other challenge is just, with my asset class, it has gotten a lot more competitive. So really trying to differentiate myself from other PEs. And I think the one thing that really does differentiate me is that I have a very successful brokerage background, whereas a lot of PEs will send in a market director. That guy's probably never brokered a piece of real estate. He's never had to live on the street like I have, and bang doors all day long and do that. And I have a relatable sense to brokers very quickly that allows them to trust me. And then I close, so getting them to trust me on that end, it's great now is in Dallas, I have a lot of my competitors on the brokerage end repping me on deals, and for me, it's, hey man, let's buy this together. I'll show you how I do everything. You can invest in my promote level. Like, I want brokers to own real estate because they're really the source of it, man. They're the guy on the street at 4:00 on Thursday, sweating, in a suit and tie, trying to make a deal happen. And I've been there, and I want to help those guys. And so I think that's a very differentiating factor for me that helps me source deals and helps guys bring me deals over other people. So that's something I'm trying to work on. And I know that's a challenge for a lot of companies, is they want deal flow, right? Because they used to call me, right? Hey, bring us deals. And I'm like, oh, you're just like the fifth guy that's called me about bringing you deals. What makes you different? They never really told me what makes them different. They all told me they had $1 billion. I'm like, if I had everybody's got $1 billion in this space, like it seems like, and so I think the challenge is making sure that I differentiate myself that way and carry
it's
myself.
Competitive down there in your market in the Metroplex.
Oh my gosh. I think it just overtook Manhattan as the hottest commercial real estate market.
Very, very good. And it's not a surprise to me.
Yeah.
I think in New York City, more than 25% of the occupancy rate is just not there. I mean, 25% of those employees didn't come back to the city.
Right.
Even higher.
Yeah.
I don't trust the data set. Are there any recession-proof real estate investments?
Man, I guess if you have an absolute net lease with 15 years on it with a AAA credit rated tenant, that's probably going to be okay.
You talking about Amazon or what?
Yeah, Amazon or maybe Walgreens. I don't know what they're rated.
They're doing well.
Yeah,
CVS is up. Yeah.
I think, every small business, a lot of companies I lease to are small businesses.
Okay.
I would say when COVID hit, I think we had maybe between my portfolio and my brother's portfolio, I think we had one tenant really toss us the keys. And I think they were just like, we quit, we're done. Like they didn't even try. I think it was like a month in and they just go, yeah, I think he was older. And I think he's like, I don't have the fight left for this round. I think the way you work through a recession in real estate is you got to work with your tenant. You got to just kind of, okay, man, what's the deal? How can we help where we still remain profitable or we remain above water and you remain above water? Because this will turn. And, that also provides a lot of opportunity in that time too. So maybe you don't have a recession proof piece of real estate, but you make it up on the other end when you buy right in that kind of market too. So it kind of weighs itself out. So, yeah.
That leads me to my next question. What is the due diligence process like and what does the investor need to look out for?
Well, in my world, our due diligence process looks like this. When we get an LOI agreed to, we already start a kickoff meeting on that property. And me and my team sit down. We use a tool called Asana. It's just a project management deal. And, the whole team gets in the conference room and we sit down and go, okay, we're buying this asset. Here's what we need to do to execute due diligence. You're doing this, we just assign it all out and everybody gets going. And I have one guy running full inspections. I actually have two guys running inspections. They're, my COO, Joey, he's a mechanical engineer. So it's like when we go look at a building, I'm just looking at the real estate and he's like crawling up a pipe, So he's real into all those details. So he's a great asset on the team for that. Then Isabella, she's getting all the things together in our portal. We're going to do our raise. So, and then she is bidding out all the debt terms and getting all the insurance bid out. So there's a lot, we try to typically get between a 40 and 60-day due diligence period, depending on the size of the property, depending on how many tenants are in it. We buy a lot of single tenant buildings. So those are easy. If it's a multi-tenant building, then we definitely need more than 60 days or right around 60 days just to get through the leases. That's a big burden. If there's, if we're buying a property with 10 or 15 leases on it, there's a lot of lifting in there that has to be done. Making sure the leases are what they say they are, because these leases, nothing's really promulgated in our world. And, every landlord's is different and they will tell you that, hey, yeah, these are triple net leases. You open up the lease, there's no management fee. And oh, guess what? You can't really raise taxes. And, there's all these little things, these tweaks in it and stuff. And, it's funny. I always get in arguments with investment brokers. I go, well, let me see your underwrite. And he shows me, I go, well, there's no management fee. They go, oh, well, it's a net lease. You don't have to do anything. I was like, man, someone has to do something at some point. Don't tell me that. It's really, really getting into the nitty gritty of those leases. There's a lot of devil in the details of those. So, and after that, man, it is just, we meet twice a week on ongoing acquisitions. I'm like, okay, where's this? Where's this? Where's this? When's this going out? I mean, it is just, and everybody's so busy now. It's like, you got to just stay on top of everybody, get it done, and then the whole banking situation right now is so crazy with the rates and everything. And banks are skittish and getting them to, get you the right terms. So, I mean, our debt process is pretty intense. We'll bid out to about 10 to 15 banks. Trying to get debt terms, and I'll use a debt broker every now and then too if I just can't get what I want. But I try to do that in-house for my clients. I try to go get the best deal for our debt on the deal for our investors, and a lot of that's just through my relationships and that I've made and building the OM within the in our portal. So I do a full screen recorded call, all my underwrites, everything in it. Here's everything. Here's what I see. Here's what we're doing. This is why I like it. This is why we're buying it. So when an investor sees a deal in my portal, it is the train has left the station and we are going, you can still get on, but we are buying this thing unless there's a bomb underneath it, so.
So your team is a symphony that comes together.
Mm-hmm.
It knows what they need to do on the execution side. You understand the timeline, which is interesting because you're looking at 40 to 60 days and sometimes a little longer with the multi-tenant. Hearing in some areas, some of the larger firms are coming in and they're willing to close without the due diligence. And I'm like, whoa, that doesn't make a lot of sense from my point of view.
Yeah.
What's taking place. So that's some of the competitive landscape that's out there. Of course, what's coming down the pike, we may be heading into a recession, softening the economy at the over leveraging. That probably is going to change. Some folks thought they could do something where when they exited, they were going to make money versus if it's profitable month over month and you got the cash flow, we can do the deal. It's not about when we go to sell the property.
No,
the deal's got to fund now. Okay.
Yeah, exactly. Right. It's and I think what you're talking about too is that, I think the softening is kind of good because sellers have kind of put guns to people's head.
Okay.
And so now when I'm negotiating a deal, I'm like, this is what I'm doing. Look me up. I close. If you don't want to do this. And where I was, having to jump on a little harder, say 90 days ago, right? But I think it's healthy for it. I think it's kind of needed. Hopefully the Fed can land us softly, not hard landing. Who knows? We'll see how
it plays out.
Yeah. So
the other thing, when you're looking at the leases, we're going to talk about some technology. Some of the artificial learning and machine learning, at some point when you feel comfortable, you could run the leases through it. And it already takes, meaning your expertise and years of experience on what you're looking for, it'll only bring you out the nuggets that need to get addressed.
That would be great. They probably have that now, don't they?
Yeah, if you look up the word GPT-3, so GPT-3, that's the artificial intelligence to read, meaning the engine to read the leases.
Oh, okay.
So the idea is it reads many leases, meaning you could throw all the leases that you have in inventory at this point, pre and post, and have a template. And it'll actually help you isolate where those issues are ahead of time. So your time is actually spent not reading the lease. It's about, all right, what do we need to address for this particular tenant? And the work has been done because it's automated. And I can help you with it, post.
Yeah.
I'm living in that space. Also, the metaverse, at some point in time, we may find where you may be able to release your building online in the metaverse, not just the physical aspect. So it may come with an NFT. So there's another stream of income that goes out, but somebody actually put cash on the front end on it, and you guys are handling, the property management.
A lot of the NFTs and the metaverse. And, I've tried to think of a way where you could make your NFT for a property almost like a liquid stock, right?
Very good.
Where you could, hey, you want to get out of the partnership? Go sell your NFT on the, Ryan Stuman, he runs an executives group here in Dallas.
Excellent.
And he is really into the metaverse and NFTs. And, it's funny. I'm like, hey man, you know what you're doing. I just give him money and he invests my money in NFTs and stuff. I was like, you do that. I'll do the building stuff. But I think it's very interesting. I think you could kind of brand yourself with an NFT and then almost make it like a stock, you can trade in and out of portfolios. So I don't know what that looks like on the legal end, but
you bring up something important. When you go back to your legal counsel, ask them if they're familiar with the DAO.
Okay.
So a formation of a DAO will allow the members of the group to run it, and you're not really personally liable. It's really the group that's got the decision making. So it's an independent entity, meaning where the decisions are being made. And there's a contract sitting in there and everything is pre-decided on how things, if somebody wants to exit out, all right.
Yeah.
Chances are the existing members of the DAO have an opportunity to pick up the additional assets at that point of the NFT and then cash that individual out. Now, will they get paid in crypto? Well, it's up to the rules. What do you guys set up? Or they're going to get paid, in US dollars and fiat currency. So the other side of it is, look, you may not pay them out 100%. You may give them 10% and say, look, you're going to get money over time. Which matches up the cash flow, with the deal. So everybody's happy and there is a secondary market. So it's sitting out there.
Yeah, no, it'll be interesting to see how it plays into commercial real estate, because I feel like commercial real estate and, I kind of group NFTs and crypto kind of with social media in a way too. I feel like they're all kind of the same universe, and social media and commercial real estate have not really ever seemed to take off together. You know what I mean? So I use it a lot, and I'm finding a lot of success in using it. But commercial real estate's very old guard, very old school. And so they're not capital. I think there's a whole market there for commercial real estate people to capitalize on it, and then eventually down in the NFTs and the metaverse type stuff.
I think it's coming quicker than we think.
Yeah, no, I do too. I think you just can't deny it anymore, right? You better get into it, because if you're not, you're going to be left behind. So
it's interesting. Do you see any trends in the commercial real estate or in the private equity markets at this point?
I think the trend I'm seeing is smaller operators like me. I think it's I'll say this, it's not as hard to get into. Don't mistake that for thinking it's not hard.
Okay.
You know what I mean? I think there's a whole world out there for, if someone wants to become an operator, you got to be an entrepreneur. You got to be willing to take some risk. I mean, I signed the debt on everything, and you got to really be willing to take a shot, and take a chance. And some people don't want to do that, and that's great. That's why there's LPs in this world. They want someone that's going to take the risk and let them handle that. That's why we have this world, And so I think the trend is if you want to do this, you just got to go do it, man. You got to go get in there and do it. Do your first deal. I remember when I was probably 25, I was at some real estate investment club here in Dallas, and someone kept asking all these questions about buying a house and all this. And I kind of lost it. I just looked at him. I go, just go buy one. Just go do it. You might lose $5,000, but the education you get will be incredible. But you probably won't lose. Real estate's pretty good unless you just really got duped, And so I think there's a lot of more trend for entrepreneurship. I think that came out of COVID, because I think a lot of people don't want to go back to work for somebody, So I think if you really want to start your own trend, I think there's a lot of trend for a lot more people, like you said. Before I think we started this, before, where it was you had to have gone to an Ivy League, have an MBA background, been on Wall Street. I don't think that's necessarily the deal anymore. I think the deal is, can you go find a deal? Can you go find a good deal, and can you execute? And if you can do that, I think the trend is you can be successful in this. So
we got syndication. You could see it doesn't have to be their dollars, all of it.
Yeah, exactly. Yeah. I mean, that's what I do. I syndicate every deal by deal. It's hey, I'm buying this. You can buy it with me. If you don't want it, I don't care. I'm buying it. So that's when my investors get to take a look at it. I have some pre-commitment people. They're like, hey, whatever you're doing, we're in for this amount every time. So that makes my raise pretty easy. I know I usually got about 50% of it covered, and then
that's great.
Yeah, so
that's peace of mind.
Yeah.
So, is there anything I haven't touched on that you would like to add?
Well, I mean, gosh, you could talk about private equity for hours, right? So
no, it's okay.
Yeah, no. I do think something that I think might start happening, kind of back under the trend type things, is that I think you could probably see some people now with where interest rates are going and where sellers are still feeling they're in a seller's market, which they kind of are. There's still a lot of pent up demand out there. I think you might see some deals where operators, if you're used to investing with someone, they might start bringing their pref down a little, just because the cash on cash is not there to do it. So I don't think that's a horrible thing. I think that keeps your operator still buying real estate, right? Which, if you're with a good sponsor and a good operator, I think that's fine. I think there's just going to have to be some adjustments in business practices on how you structure your deals going forward. My structure is always usually pretty simple. It's just a pref, return of capital, and then a 70-30 split, and that's it. And so now I'm adjusting, if we're buying a vacant building, it's 8 pref. If we're buying a lease building, it's 7. If we're buying credit, it's probably going to be 6. But other than that, the split doesn't change. But I think that's something, if you do understand the person you're investing with, and they want to change something like that, I think it's something that might be kind of warranted right now, as long as you're still buying good real estate assets, right? It's not going to change everything, but it's going to keep your operator going, right? So
that's the critical part.
Yeah, that's something I think is a trend too, Mike. See.
From acquiring to actually disposing, meaning selling that property, what does that timeline look like?
I underwrite a 5-year exit on everything, but I have kind of the philosophy of that I'm just an opportunist. Okay, so someone shows, and this usually happens with a vacant building right now in Dallas, right? If I get a hold of a vacant building, there's probably a user that's going to try to show up and buy it from me. And being the funnel that I have with Mercer Company, you know, we've got 20 guys on the street every day just bringing me deals, right? So I'm buying pretty below market usually. I'm getting a hold of things before they hit the market. So, you know, there's some good spread in there. So, you know, like I bought a building in February. I'm negotiating a contract now to flip it right now. That wasn't the plan. I'm already fixing it up. I'm full into the rehab, you know, to get it ready to lease. But there's a good chance, you know, we're going to hit our target and we're going to exit, you know. So there's that. I don't have a pure aggregation and exit strategy. I do think that, you know, my goal is to get to around 5 to 5.5 million square feet by the end of 2024. And then I think at that point, I will probably start taking million square foot chunks off the table, right? So I kind of keep my operating company at a certain level, don't have to keep staffing up, and we just take chips off the table 1 million foot at a time while we're buying 1 million foot at a time. So
very good.
Something like that. So
Jeremy, how can our listeners contact you? Are there any links you would like to share?
Yeah, I'm pretty active on Instagram. That's at JB Merco. We also have a YouTube channel for Matador Capital. And then Matador Capital is just matador-capital.com. And then the Mercer Company is mercer-company.com. So, anywhere on there you can get a hold of me, you know, DM me, shoot me an email, whatever. So we're pretty responsive. And we love to talk about real estate, man. I can do it all day long. So.
The goal is to send you some more assets under management. It's well managed by your team. So.
Yeah.
I want to thank you so much for your time, Jeremy. Your sound advice on commercial real estate investing is something anyone listening can benefit from. Thank you for sharing that vision. I want to thank our listeners. I look forward to being back with you shortly for another episode of the Private Equity Profits Podcast. This show has been produced by Market Domination LLC.